Hey Bowtie Nation, Joseph Hogue here with your step-by-step to investing $1,000 in 2025. I'm going to show you 9 stocks to buy, 3 stocks in each of 3 different goals, from stocks for the highest returns to ones that are going to max out your income, and the safest stocks for retirement. One of those strategies I'll show you is the same one I used to build a $1.7 million portfolio, starting with less than $1,000 while still in the Marine Corps. Back then, pay for a corporal with just over 2 years was under $1,300 a month. But I dug and I scratched up the money to start investing. Let's get started with our 3 growth stocks here. And Fortinet Inc., ticker FTNT, a stock I added as one of my favorites for 2025 just this week. All you out there in the nation know cybersecurity is easily my favorite long-term growth theme, and I already own CrowdStrike Holdings, Palo Alto, and Zscaler. Here, more than 2/3 of Fortinet sales are in network security, where the company sees stronger growth ahead, and it's got great product lines across all 3 business segments: networking, operations, and SASE. The second largest company in the space means Fortinet can push those economies of scale to help it grow profitably. It's twice as profitable as Palo Alto on the operating margin basis and well above peer average for cybersecurity companies. This company is not only benefiting from the rise of AI through that increased security demand, but also implementing AI into its products to instantly detect and mitigate threats at a reduced cost. Billing and revenue growth slipped in 2023, but rebounded last year and is expected to go further this year. Now, I had been investing for growth in these cybersecurity names, so I hadn't added Fortinet yet, but it's hard to overlook that huge lead in profitability and the lowest price to earnings to growth valuation, so I'm buying this one as well. That's our first stock for growth investors, and we've still got 2 more, but for each of these themes, growth, income, and retirement, I'm going to show you 3 stocks to buy, how to invest $1,000 to get started, and what to look for in those stocks. For these growth stocks, the goal here is just what it says, to grow that multi-million-dollar portfolio where you can start living off the dividends or take that hard-earned retirement. Next up here, overshadowed last year, Advanced Micro Devices, ticker AMD, could be the headline stock for 2025. Now, while Nvidia will still dominate in that AI chip market, its Blackwell chip took longer than expected to ship and is at a very high price point. That's going to open an opportunity for AMD to take some of that market share. Plus, AMD recently got a boost in its market share for gaming after Intel's Arrow Lake chip was a massive failure. And beyond all this, let's not forget, this is already a company expected to grow revenue by 26% this year to $32 billion. That would put the shares at just 6 times on the price-to-sales basis, where it typically trades closer to 8 or 10 times, and where Nvidia trades at some nosebleed valuations of 30 times price to sales. Now, analysts have been absolutely brutal to AMD lately, writing it off completely, and the shares are now down 11% in the last month alone. I think this one is one of the big surprises for 2025 and a great time to buy. The third stock in each of our groups is going to be an ETF for that broad exposure to the theme. And for growth, we've got the Global X Cloud Computing ETF, ticker CLOU, a fund of 37 stocks in software, platform, and infrastructure as a service, managed server storage, and edge computing infrastructure. And most of AI is going to be managed through the cloud, with Gartner forecasting a 150% increase in spending on cloud services by 2030. These are some of my favorite individual stocks as well, including Shopify, Snowflake, and Salesforce Inc. Now, investing $1,000 in these 3 growth stocks, you might put $500 in that broader ETF for that instant diversification and safety, then the remaining $500 split equally across the 2 individual stocks, or add a few more growth stocks to that. This is similar to that core satellite strategy that we talk about here on the channel, where you have most of your money invested broadly in that ETF on the theme, and then those smaller investments in individual stocks. I'm going to show you what to look for in those growth stocks next, but I also want to personally invite you to get the Weekly Bowtie, our free weekly newsletter with all the stock market news, strategies, and trends you need to know. Each week before the market opens, I'll show you what I'm watching and the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community, so look for that sign up link below. Now, you're going to need more than just 3 growth stocks, so here, you're looking for companies posting 15 or 20% plus growth in revenue each year. That's that main growth focus, but the best returns are also going to be those with the strongest profitability as well. I've talked about the Rule of 40 before on the channel. It's a measure I used working as a venture capital analyst, and is any growth stock where the annual revenue growth plus the operating profitability adds up to 40 or more. For example, with that 26% expected growth in sales this year, plus the 11% operating margin on shares of AMD, we get very close to that number. Or here for Fortinet, while sales growth is slower at just 12% this year, the operating profitability of 30% puts it well over a combined 40. As much as I love seeing that portfolio grow, those growth stocks aren't going to pay the bills, so If you want to live off your investments, here I want to show you 3 stocks that are going to put more cash in your pocket, starting with Main Street Capital, ticker MAIN, with its 7% dividend and 31% price return over the last year. Now, Main Street isn't the highest paying dividend you'll find, but it is the most consistent and dependable I've found. The dividend hasn't been cut in the last 5 years, and while it hasn't grown much, there have been enough special dividends to grow that total cash flow, and the total return of 74% is 11.7% annually. So dividend yield plus a price return on this one. As a business development corporation, Main Street specializes in loans and equity investments into mid-sized businesses. The company has a portfolio of 182 investments, with the largest representing just 3% of that total fair value. So a hit to any of these investments isn't going to hurt the shares that much. A big part of why Main Street has been one of my favorite monthly dividend stocks is the yield it collects on loans is so much higher than its dividend yield, with an average yield on its portfolio over 12%. That's collecting more than enough to pay for the 7% dividend and reinvest in the business for growth. That not only means dividend sustainability, but also a stock price return over time. Here, Innovative Industrial Properties, ticker IIPR, had a rough year, but there is a lot of hidden value here, and besides the 12% dividend yield. IIPR is unique among real estate investment trusts, or REITs, in that it leases to companies in the regulated cannabis industry. Now, the company has stepped in to meet the industry's limited bank funding to supply those real estate for grow and retail operations. IIPR owns 111 properties with 30 tenants across 19 states, and while the all cannabis-related stocks have fallen out of favor, I consider IIPR more of a real estate play than in marijuana. Shares here took a big hit post-election when Florida voted down to legalize marijuana, but the trend to legalization is still intact. The stock took another nosedive more recently when the company reported that PharmaCann had defaulted on 6 of its 11 leases in December. Now, PharmaCann does account for 17% of IIPR revenue, and cash flow is going to be uncertain over the next few months, but there is a lot of overlooked value here the market isn't seeing. First, those industrial properties, easily the healthiest segment of the real estate market right now, can always be reworked to serve other industries outside of cannabis. Now, there is still a case for that current business model as the cannabis use and regulation loosens, but the real value here is hidden in those industrial properties with almost no leverage. And the company carries just 11% debt to assets in an industry that usually carries about 5 times that much debt. So with just a little tweak to the business model, IIPR could leverage up and increase those assets as well as revenue. Now, folks, here in income stocks, it can be tempting to just invest in those with the highest dividend yields, but it's a trap that is going to bleed you dry eventually. That 20% dividend on shares of Invesco Mortgage Capital may look tempting, but look at what's happened to your money over the last decade. You would have lost 95% of your portfolio. Instead, look for stocks paying between a 6 and a 12% dividend, but also the ones that have grown their dividend payout and haven't destroyed investor wealth. We cover a lot of metrics for dividend stocks here on the channel, but it can all be as easy as that, just looking at the stock price over time, making sure investors haven't lost money. Then you can go to the historical data tab, change the time frame to 5 years, and then to show dividends only to see if the stock has increased or cut the dividend. Now, you can use other measures like the payout ratio and cash flow growth, but start with these just 2 basic checks before you buy any dividend stock. For our broader ETF in the income theme, we have the VanEck BDC Income ETF, ticker BIZD, a fund of 30 business development corporations paying those high yields, and you see it owns the largest in the group here, including Main Street Capital. Now, you can see in this chart that it doesn't produce much in the way of returns, so expect that 11% dividend yield to probably be all you get, which is probably why I'd only put maybe a third of that $1,000, so maybe $300 in this fund for this group, and split the rest out into those individual stocks for a little bit more upside potential besides the dividends. Next here, and I think a mistake a lot of investors make, is the stocks you buy for retirement aren't necessarily the same that you want for that income. So let's start here with Black Hills Corporation, ticker BKH, with a strong 4.6% dividend, but also something more. Those dividend stocks in the income theme that are going to help pay the bills will also help you when you're living off your portfolio, but if you never plan on going back to work, you need some safety in your stocks as well. That means looking for stocks in those safety sectors like utilities, consumer staples, and healthcare. The companies in these sectors typically see slower growth in revenue and have high fixed costs of businesses, so the threat of new competitors that you might see in tech or internet stocks is really low. Now, the result is these stocks might not blow the doors off your portfolio for growth, but they won't blow it up either. Having a mix of stocks in these sectors means you won't even need to look at your portfolio for months at a time. Instead, just sit back and enjoy your retirement. Black Hills is a regulated utility serving 1.3 million customers across the Midwest in electric and natural gas, and what was once a low or no growth industry is now booming with demand from data centers. BKH expects new data center demand to add 5% growth to its current earnings and up to 10% by 2028. That should also help to supercharge its dividend growth, already growing at about 5% a year and having grown that payout for 54 straight years. So that dependability is there, and now the growth is contributing to the stronger price returns, so you don't have to spend down your portfolio in retirement. We've still got 2 more retirement stocks to highlight, but getting to this point means building that $1 million portfolio beyond just those 3 stocks that I showed you earlier. I made over 100% return on 7 stocks last year and just published a new video linked here in the corner with 7 more stocks that could double your money, so make sure you watch that one next. Agricultural stocks had a tough environment lately, but Archer Daniels Midland, ticker ADM, is a leader in the space and one that will survive to thrive long term. ADM is at the center of nearly everything we eat, from grain storage, processing, and transportation to nutritional additives and even pet food. It's a $29 billion powerhouse. With the global population growing and more meat consumption meaning more grain demand, ADM is primed to grow with that food scarcity. Despite that recent weakness, ADM has been paying a dividend for 92 years and has increased it for 52 straight years. So here we have a stock with a rock-solid position and a safe theme, trading at a cheap valuation and with potential upside. Our ETF in the theme is a channel favorite, the ProShares S&P 500 Dividend Aristocrats, the NOBL. The Dividend Aristocrats is the name given to the stocks in the S&P 500 index that not only pay a dividend, but have increased their payouts for at least 25 consecutive years. The fund adjusts each year, adding those new stocks that make the list and dropping those that couldn't make the cut. It's got some great companies here like Clorox, Walmart, and Kimberly-Clark. You can see on the chart here, it's a little heavily weighted to consumer staples and industrials, but then has a solid mix in those other sectors of the economy. And besides that consistent dividend payment, the group tends to be a little less volatile compared to the market. These are all older companies with stable cash flows and solid fundamentals. Management knows it has to meet that dividend payment no matter what, so that cash discipline forces them to make better decisions. Now, with a retirement focus, you're going to want more of your money in those broader ETFs like these, so splitting out that $1,000 means maybe $500 or more in the NOBL or across a few other funds like that, while smaller amounts in those individual stocks. Get the weekly bow tie and stay up to date on all the stock market news, strategies, and trends you need to see with the link in the description. Or click on the video to the right for the 7 stocks that could double your money, 100% returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.